Howdy, y'all. Welcome back to the Liberty Call. Hope everyone had a good holiday season and Christmas, New Year's, all that good stuff. And was in Florida for 2 weeks, which was very exciting. It was not too warm, but had a few cold days here and there. But it does get a little chilly in North Florida, so it's not like it's Tampa or Miami. So, anyways, hope you had a great, like I said, good holiday weekend. Yesterday was off. It was finished driving back from East Coast. So we are ready to get back to work and see what things are happening here in the financial world. Looks like the start of the 2024 is off to kind of a meh start, but anyone who knows my opinion on things would not be surprised that the market started off on a little poof. All righty. Well, if it is your first time watching Liberty Call, I'm glad you are here. Thank you very much. If you could do me a favor, if you could give me some thumbs up, like, share, subscribe, follows, and press the notification bell, because you don't want to miss all the genius I'm getting ready to. 2024 is going to be an amazing year. I mean, we have an election. If we actually get to that point, potentially recessions. I mean, there's a bunch of things that can happen this year. So it's going to be very, very interesting. All right, let's go ahead and get into the numbers for today. Dow Jones was flat, up 0.07%, 25 points, closed at 37,715. The S&P 500 was down 0.57%, closed at 4742. Nasdaq down 1.63%, closed at 14,765. The VIX is at 13.2 right now, so basically where it was about 2 weeks ago when we had our last broadcast. Canada was down 0.41, Brazil was down 1.11, and Mexico was down 0.71%. Looks like investing.com's changed their screen a little bit. Let's see here. Over in Europe, Germany was up 0.11, UK down 0.15, France down 0.16, the Netherlands down 0.47, Spain up 0.79%, Italy up 0.57%, Switzerland up 0.73%, and Portugal up 0.9%. Russian exchanges today were, it looks like they have not been open since the 29th of December. So we'll skip those. And moving on down to the Asian markets, looks like Japan has not been open since the 29th, so we'll wait to see on them at a later time. Australia up 0.49%. New Zealand flat. Let's see here in China, the Shanghai was down 0.43%. The Shenzhen Component down 1.29%. The China A50 down 1.71%. The DJ Shanghai down 0.74%. Hang Seng down 1.55%, and the Taiwan weighted down 0.43%. So it looks like the Asian markets were pretty much in the red except for Australia. So, all righty. Well, that's everything for the markets for today. Let's go ahead and jump over to the market recap and see what they had to say. S&P 500, Nasdaq start 2024 in subdued fashion as Apple weighs. See what happened in the world today. All right, the first trading session of 2024 saw the S&P 500 and Nasdaq composite closing lower, influenced by a decline in Apple shares following a downgrade and a general retreat among big tech stocks due to an uptick in Treasury yields. The year 2023 has seen significant gains for Wall Street major indexes, driven by optimism surrounding artificial intelligence and stabilized inflation. Despite ending the previous week near a record closing high from early 2022, equities faced pressures as U.S. Treasury yields rose, crossing 4% for 10-year notes, reaching a 2-week high before a slight pullback. Investors adjusted expectations regarding potential cuts in U.S. interest rates for the year affected growth stocks, particularly in the tech sector, which typically benefit from a favorable rate environment. Apple's decline was fueled by Barclays downgrading, citing weakening iPhone demand, while other major tech stocks, including NVIDIA, Meta Platforms, and Microsoft, also experienced losses. And I'll jump in here. Something I've noticed a lot is that I think it's T-Mobile. They're like giving away like 4 phones right now. If you sign up for iPhone 15s or whatever their current version is, it's like, are they having trouble selling phones and they're just giving them away just to make their numbers look good? So I don't know. Just something I noticed from a lot of advertising. All right, where were we? Despite the positive sentiment surrounding the tail end rally of the previous year and Federal Reserve indications of a slight pullback, Concerns lingered about the overall economic outlook. Tight monetary policy, even with gradual rate reductions, could pose challenges to economic activity. The upcoming release of the Fed's December policy meeting minutes and labor market data is closely watched by market participants to gauge the potential timing of rate cuts. Don't hold your breath, people. In terms of sector performance, healthcare, led by Moderna, following an upgrade from Oppenheimer, was a standout performer. The energy index also rose despite concerns about the economic outlook affecting crude prices. On the other hand, information technology led the decliners. Tesla reported a flat performance despite exceeding market estimates and delivering a record number of electric vehicles in Q4. Crypto-related stocks such as MicroStrategy gained ground as Bitcoin surpassed 45,000 for the first time since April of 22, driven by optimism surrounding the potential approval of exchange-traded spot Bitcoin funds. The week ahead includes the Fed's December meeting minutes and labor market data influencing market expectations regarding rate adjustments. All right. So that's what's going on in the world today. So let's go ahead and dive a little deeper into the economic indicators. U.S. construction on solid ground, manufacturing under pressure. Oops, there we go. All right. In November, U.S. construction spending showed a rise below expectations, increasing by 0.4%, which was lower than the anticipated 0.6%. However, October data was revised significantly higher, showing a surge of 1.2% instead of the initially reported 0.6%. Despite the moderate November increase, the year-on-year growth in construction spending reached 11.3%. The construction sector's robustness is attributed to demand for new single-family housing, driven by a shortage of existing homes in the market. Additionally, President Biden's administration's policy to bring semiconductor manufacturing back to the U.S. has fueled the construction of factories. Yeah, I haven't seen anything really happening. I mean, they may say they're going to build the factories, but I haven't really seen a whole lot of that yet. The report indicates the ongoing strength of the construction industry, contributing to the broader economic outlook. Construction spending has played a role in mitigating the impact of Federal Reserve rate hikes, with the sector's vitality counteracting potential economic slowdowns. Private construction projects recorded a 0.7% increase in spending in November, following a 1.2% rise in October. Residential construction investment advanced 1.1%. with a notable 2.9% surge in outlays on new single-family construction projects. The housing market's buoyancy is expected to persist, particularly with the 30-year fixed mortgage rate dropping below 7%, potentially leading to a surge in single-family home building in 2024. The report suggests that the construction sector's strength could contribute positively to the gross domestic product in the fourth quarter, helping offset concerns about a potential economic slowdown. Despite facing 525 basis points of interest rate hikes since March of last year, or 22, the U.S. economy has demonstrated resilience and continued expansion. The construction sector's performance is noteworthy amid other global economic challenges, such as a decline in manufacturing activities. The Federal Reserve's recent decision to keep its policy rate steady and project lower borrowing costs in 2024 further contributes to a positive outlook for construction and economic growth. We shall see if that actually happens. I have my doubts, but I think things are just going to, I think there's probably going to be some sort of black swan event. Whether or not it's created by the government like the last time, COVID, but, we'll see if it's something that they've been trying to sweep under the rug, like back in 2019 when the economy was starting to crater and COVID just mysteriously happened to save the world and give us an excuse to print all that money. But we'll see. The Fed can maybe keep the economy afloat through the election. What are your thoughts? I don't know. All right. One last article here. This is actually from last week. And since I didn't do a broadcast, I wanted to go ahead and cover this article from Brian Westbury. It was from December 26th, and it's titled A Mild Recession and S&P 4500. So let's see what Brian has to say for his last blog post for 2023. All right. The economic forecast for 2024 presented by an economics team diverges from the consensus view of continued growth with a soft landing and no recession. While the team accurately predicted moderate growth in inflation in 2022, their expectations for 23 did not align with the actual economic performance. Contrary to the anticipated economic weakness, the economy remained resilient, leading to a significant rally in stocks. The team points out factors that challenge the optimistic consensus for 2024. The yield curve has been inverted for over a year, indicating potential economic challenges. that usually when the yield curve is inverted, that means very bad things. So for it to be inverted for as long as it has, and then to go back to normal and not have some sort of recession, downturn, whatever, I just don't see it getting through that process without something happening. All right. The M2 measure of money supply has decreased, and commercial and industrial loans have declined. Additionally, commercial construction, supported by government subsidies, is expected to falter. The team notes that despite the low unemployment rate, rapid payroll growth suggests businesses may have overhired. Consumer spending is expected to slow in 2024 as government payouts, rent and student loan moratoriums, and temporary tax cuts during COVID-19 have inflated overall savings. The team anticipates the artificial boost from these government actions will wane, leading to a moderation in consumer spending. The expansion of the federal budget deficit in the previous years, reaching about $1.7 trillion or 7.4% of GDP, is highlighted. However, the team expects this trend to reverse in 2024, especially with a rally in stocks leading to significant tax payments. In terms of inflation, the team predicts a continued downtrend in 2024, possibly reaching or temporarily falling below the Federal Reserve's 2% target. They anticipate that the Federal Reserve might respond with aggressive rate cuts, potentially leading to a resurgence in inflation in 2025 and beyond. That's a big fear. The implications for stocks are discussed, with the team suggesting that if the economy performs weaker than expected and inflation decreases, long-term interest rates may decline, bringing the stock market close to fair value. The team expects profits to be weaker than consensus expectations in 2024, coupled with Fed rate cuts, leading to a projection for the S&P 500 may finish 2024 at 4,500 or lower. And see, right now we're at, let's go back over here to this. Today, we're at 47.42, so it dropped about 200 points from where we're at today is where he thinks it's going to end the end of this year. While acknowledging the uncertainties and challenges in forecasting this team, the team emphasizes the need for investors to be selective and anticipates 2024 to be a very challenging year. I wholeheartedly agree. So, alrighty, well, that's the news I wanted to cover for today. And there's turkeys walking up my driveway. I guess they're looking for bugs in the yard. They're having to walk through the snow. So anyways, I hope you have a wonderful evening. And if you need to reach me for anything, please go to dsafinancialgroup.com. All my contact information is there. My email address is right there if you want to send me an email. And hope you have a wonderful evening. And I shall talk to you guys next time. Adios.